Welcome back to another episode on From Scratch to Profitability in Forex Trade. In this video 5, I'm going to be teaching you top-down analysis, how to confirm a valid change of character, why you should wait for a candle confirmation. So let's just get into today's business. As always, if we are doing our top-down analysis, we always start from the daily time frame. Now you can start from any time frame. It depends on the kind of trader you are. So if you are a swing trader, you should know the time frame you should start from. Now in the daily time frame, we normally switch it to candle to line chart. For this video, I'll be analyzing gold, which is SAUSD. One of the reasons why I'm analyzing different instruments for different video is because it is to show you that the strategy works for any instrument at all. So firstly, we'll look for our support and resistance level. Remember, I told you guys that the support and resistance is an area, it's not a particular level, it's not a one price number. Okay, so you can see the market acted as a support there, acted as a support here. We'll also take another one. Okay, we'll take this one right here. Yeah, I'm going to take this one. Market acted as support there. Click that. Let's hold on. Let's switch it. I'll be able to move it. Okay. I remember to always identify this by double clicking and typing D. That is to signify that this support and resistance is from the daily time frame. We are going to take one more for the last one. There are a lot of support and resistance here, but you just want to take the one that is closer to the current market price. When I mean current market price, you can see this is the current market price. So your support and resistance should be within this area. Okay. Support there, you can see that. Okay. Acted as a support here and it acted as a resistance over here. With our support and resistance in place, just by looking at the line chart, the market direction, you can say that SAUSD is in an uptrend. So we'll go over to the 4-hour time frame. I'm going to take this one out now. Take this one out. Take this one out. In the 4-hour time frame, I'll switch it over to the candlestick chart. In the candlestick chart, we're going to break down the analysis. We are going to break down the market structure so that we can understand the page and where we are coming from, as to tell where we need to go. Okay. Now this is a swing low of the market. This was the recent swing low of the market. This level here, this one here was the recent swing low of the market. The meaning of swing low is that, just as the name implies, the lowest point the market gets to before a significant move to the upside. The meaning of swing high is that the highest point the market gets to before a significant move to the downside. So this was the swing low of the market. This was the recent swing low of the market. And according to the way market move majority of the time, it moves from swing low to swing high. So if the market gets to swing low first, you're expecting the market to move to the recent swing high. It's like going from support to resistance. So since this was the recent swing low of the market, and the market have currently come down to this level and swept this liquidity. So this is known as liquidity sweep. This is what is known as liquidity sweep. So you can identify this as, this is usually identified with the symbol X, but for beginner stage I'm going to say swing low liquidity sweep. That's the meaning. The dollar sign stands for liquidity. The X stands for liquidity sweeps. What liquidity sweep means is that there are pending orders around that area. Stop loss orders are here. Buy pending orders are here. People who took buy position from here, some of that take profit are in this level. So when they say liquidity area or liquidity sweep, it means that there are a lot of pending orders around that area. And you might be wondering, how do you know liquidity levels? Liquidity levels are levels like swing high, swing low, equal highs, equal low, order block, fair value gap. So these levels, they usually are orders within these levels. There are pending orders within this level. There are take profit orders, there are stop loss order, buy limit order, sell limit order. There are lots of liquidity around that level. So that's why you know that those levels are liquidity level, and the way the market reacts to it. You can see that as soon as the market get to this level, it created, it took liquidity by leaving a wick, and then created a bullish engulfing candlestick, and then it started pushing up. But we want to analyze the market to see how we can predict the next move of SA USD. Now, since the market have swept this liquidity, since it was recent low of the market, and now the market has swept the swing low liquidity. The next place, which is the next level we are expecting the market to get to, is actually this swing high. This is the next place we are expecting the market to get to. Now don't get it confused. Remember I said that swing low is the lowest point the market gets to before a significant move. So this was the lowest point the market get to before this significant move to the upside, right? So we're expecting the market to get to this swing high, but the market will not just go to that area direct. Okay, the market will still make some move, consolidate. There has to be a pattern in order for the market to get to that level. So our work here is to figure out how to follow that pattern before the market gets to that level. With that in mind, we also know that we are currently in a uptrend. Okay, now after this swing low sweep, the market trade up. It reacts to this daily resistance level. It came down, and then it created this order block. Remember in video 2 or video 3, we talked about video 1, we talk about what order block is. Order block is the last opposite candle before the significant move. In the 4-hour time frame, this is the last opposite candle before the significant move. Don't let the color fool you. If I should change it to the initial color, this would be a red candlestick, but the color does not really matter. Now we have the order block in this level before the significant move. And remember that one of the things you should pay attention to is liquidity sweep. You should pay attention to liquidity sweep. Okay, we have the order block, and then we have a liquidity level around this area. There's a liquidity level around that area. How do I know that that's the liquidity level? First is because of the weak rejection. Because of the weak rejection. Okay. So this is the liquidity level. I'm going to mark this as X. And also, here the market changed character around this level, please known as change of character. Change of character, okay, as long as the market is above this point, as long as the market is above this point, we should be looking for a buy position, which means that the market is still in an uptrend. As long as the market is above this point, we should only be looking for a buy position, not a sell position. Okay, because the aim is to follow the market before it gets to this swing high level. Now we have our change of character. The market went up, market traded up, it created an equal high here, equal high, which means that just as the name implies, equal highs is EQH. That's known as equal highs, also known as double top. Created an equal highs here, but then the market came to respect this order block. So this order block now is not acting as a support to the market. With this in mind, the change of character, the equal highs, and our liquidity level will go down to the 30-minute time frame. 30 minutes time frame. In the 30 minutes time frame, you can see that the market has constantly been creating BOS, which is known as break of structure. If you watch video 1, you will know what break of structure is. But break of structure is when the market is constantly creating significant higher highs or lower lows. Break of structure to the upside. Break of structure, and also the market, after creating the break of structure and making this equal top, making this equal highs, the market was unable to create another break of structure, which means the market was unable to surpass this recent high, but the market crashed down, and upon crashing down, the market broke structure around this area. The market changed character around this area, not break of structure. Market changed character around this area. Now remember that we said if the market has changed character, which it means that the market has changed from a buy position to a sell position, which means from a upside to a downside. Now, even with this change of character, the overall direction from the daily and the 4-hour time frame, it's still a uptrend. So we should still be looking for a buy position, not a sell position, because this change of character you just see here in the 4-hour time frame is actually nothing. Okay, in the 4-hour time frame is just one candlestick to the downside, and the bigger the time frame, the more valid your area is. So if the market has not changed character in the 4-hour time frame, but has changed character in the 30 minutes time frame, you should you should follow the overall direction. Okay, and the overall direction is a buy. In order for this market to change character from a buy to a sell, the market will have to surpass this low here. The market will have to surpass this low here. So let's get back to the 30 minutes time frame. The market change character. How do we know that the market has changed character from a buy to a sell? This leg here was the recent low of the market. This was the recent low of the market. And remember, we said that if a candlestick body, which means a candlestick body, closes above the recent low of the market in an uptrend, it means that the market has changed character from a buy to a sell, from an uptrend to a downtrend. And that was exactly what happened around this level. The market traded down and broke structure and changed character because it closes above the recent low with a candle body. And to even confirm the change of character, the market reacted to this level as a resistance. Usually, after a change of character, the market will either leave a order block or a fair value gap, or inefficiency or imbalance. So after the market changed character here, this point at which the market changed character has now become this point at which the market changed character. Hold on. This point at which the market changed character has now become a resistance zone to this level here, because the market surpassed with a candle body, it came back to retest, and then it reacted to this level, confirming that the market has gone from a buy position to a sell trend, to a downtrend. So it reacted to that level and went straight down. So with that in mind, that confirms that the market has already changed character because of the break and retest of that level. So this level was a support level here, and it acted as a resistance level here. And the market is currently reacting to this. Remember, this rectangle line we draw is from the order block from the 4-hour time frame. Order block from the 4-hour time frame. And there is inefficiency here, which is imbalance. The market filled it, but it did not feed it to the very tip, to the very end of it. So there's still an inefficiency here for the market to fill. And the market always like to fill fair value gap. The market does not allow any imbalance. If there's some kind of imbalance, the market always tries to fill that imbalance. So we can be rest assured that the market will definitely fill this fair value gap. And as a matter of fact, the market will fill fair value gap, and the direction of the market is to this level. Now, okay, so what will be your move in order to predict the market and to catch the market and to trade to that level? What you can do in this position based on the support and resistance strategy is that since this leg have taken out this swing low, sees this leg, which means this pull down has taken out this swing low liquidity. Now this particular leg is automatically protected since this pullback swept this swing low liquidity. This recent low now is automatically protected. We are no longer expecting the market to come down to this level again. What we're expecting the market to do based on market analysis, what we're expecting the market to do is to come down to this level, give us a liquidity sweep with a bullish engulfing candlestick, then we can take a buy position to the upside. I will explain. I will try because we are in December and most banks and big institutions are going on holiday. There is not enough volume, enough liquidity in the market, so the market is really moving slow. Whereas I really want to trade a live trade using this strategy, and I know I will do it at some point before this program will be over. So what we're expecting the market to do, just like as it did here, is to give us a liquidity sweep, bullish engulfing candlestick, and then we can take our buy position. Now if you want to take your buy position, you can't ignore this recent high, because remember the market move in a zigzag form. Okay, the market does not move in a straight line. So this high, you have to meet this high before you meet this swing high. So your take profits will automatically be at this high, at least for your first or second. Maybe if you had multiple position, you have to close some of your position around this level, because if the market gets here, it's more likely to react. There are two reasons why it's more likely to react. Firstly is because it will be the first time of the market getting to this level. Secondly, it will be that this level will be a resistance level to the market. So this swinging high now, this high, not swing high, is already a resistance level to the market. So it's a resistance level. So the market will definitely react to that level. Now for the last one, let me show you an example on why you should wait for a confirmation candle before entering a trade. Now with this program, just because I'm still learning how to trade and I'm still developing my strategy and working on myself, this program alone will not just help you. This program alone cannot help you to become a fully profitable trader, or else you have to be following up on my videos from time to time, which to be honest, that would really slow your progress. Okay, but if you have been able to learn everything I've posted on this program to this very video, then you should be able to at least analyze market as a beginner. Just know your support and resistance. And because one thing about trading is that most of the things you will learn in trading, you have to learn them on your own, and the only way you can learn them on your own is by you practicing it every day. It's by you taking trades. I feel like trading is a game, is a business of self-discovery. There are some things that just you alone can discover, and that will make you unique from other traders. Okay, and in order for you to get to that level is by you practicing again and again. Now here's the reason why you should wait for a confirmation candle before entering a trade. The first reason why you should wait for a confirmation candle is that it reduces your stop loss. It reduces your stop loss. Before I don't normally wait for confirmation candlesticks before I trade. I just take the trade as soon as it gets to my point of interest. But when I've started waiting for confirmation candle, it reduces your stop loss. And secondly, because your stop loss, you have now reduced your stop loss, you can now increase your lot size. Now that you have increased your lot size, you will now be able to make more money in a very short period of time with the same amount of pips that you would have caught if you had increased your lot size. Let's say, for example, you take a long position, okay? You normally have your stop loss like this, and you target 3 risk to reward, and you are targeting this high. For example, you are targeting this high, okay? Now, from here to there will be from here to there will be a, let's say, five risk to reward, which is this risk reward ratio 4.98, but let's say 5 risk to reward. Now if you waited for a confirmation entry, your stop loss is supposed to be here. That I've taken the trade from 5 risk to reward trade to 9.5 risk to reward trade. So if you are supposed to use, let's say for example, you are supposed to use 0.1 for this lot size, you can now increase your lot size to, let's say, even 10 or one standard lot, risking the same amount of money. Then you will make more money in a very short period of time. But this is a strategy that I just discovered. This particular lot size strategy is what I just discovered uh, last week. Okay, but even though my stop loss is still very small, if you are in the Telegram channel, you can see that most of the trade, the stop loss, all the trades, the stop loss is very small, and the majority of the trade goes in my predicted direction. But this next level stop loss is what I just discovered last week, and I think that because of the slow movement of the market, I've not really gotten any chance to practice it and exercise it in the live market. So maybe that will be next year. Okay, but that is the reason why you should wait for a confirmation entry, confirmation candle before entering a trade. So that is it for this video 5, and in video 6 we are going to dive into another market analysis. There are going to be more video on market analysis, to some point, and then we can move to video where you get to how to create your broker account, how to connect your broker to your MetaTrader 5, and how to trade demo, how to set your stop loss and take profit and lot size. We'll get to all of that. Okay, it's just a step-by-step process. See you in the next video.